Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to another episode of the Trading with Venus podcast. I'm your host, Raman Gill. The other day I was talking to my husband and he told me about this trade that he took. He had a great trade. He identified it correctly. He entered the trade at the perfect time and he had a big profit target because he thought the trade would run that far. However, he does have a full-time job and he couldn't really sit there and watch the trade. So when he looked at his phone, the trade was almost at his profit target. It was about $500 short. And this was a profit of $3,000-$4,000 that he was sitting on. And it was a futures trade. So instead of taking the profit, what he had available, he didn't. He just left it and went into a meeting. And then, of course, he could not check his phone. He could not look at the trade. When he came back, the trade had almost gone to his profit target, but instead of hitting the profit target, it was just a little short, and then it had turned around and gone completely in the opposite direction. So instead of being in a big profit, he was almost at break even, and he was so upset about it. It is frustrating when you have a big profit target, you do everything correctly, you do your analysis properly, you enter the trade at the right time, and then it just gets so close to your profit target, you're like 10 pips away, and you're waiting for it to reach your profit target, but it pulls around and then turns around and goes back. So now you're struggling with, oh, should I take the profit off of the table, or should I just let it run? Is it going to turn around and actually go hit the profit target? What do you do under those situations? What I would say is take the profit off the table. This has happened to me many times where you're into those last few pips and it doesn't quite get to your target. Under these situations, it's best to just take the profit and call it a day. The trading journey is not built upon hitting home runs. It's made with this small, consistent profits, small profits that we book, we take off of the table, and then we move on to the next one. Because a lot of times when we try to push it and try to go into that big profit target, hit the home run, it doesn't work. I know we all want 1-to-5, 1-to-6, 1-to-8 risk to reward ratios, but if you're a day trader, that is not always possible. If you are willing to sit in the trade over a long period of time and you have a large enough account size to be able to do that, it sure works. But for day traders, that is not possible. We have to take our onesies and twosies off of the table and book the profit so that we can look for the next opportunity. I remember when I used to play Ultimate Frisbee. I used to play on a co-ed team with my husband, and one of the plays that was really popular with especially the guys was this big hug play. Now this is a glorious play, everything looks great, the person who's throwing the disc looks like a hero, the person who catches the disc looks like a hero, but it's a really low probability throw. So what you're doing basically is one of the guys would stand on one side of the field and they would do this big roll up to throw the disc really, really far. And of course, you throw the disc far, and then somebody like myself who would be a fast runner or another guy would then run strike deep and try to catch the disc. And of course, when you go catch the disc, it looks great because you have to read the disc and then you jump and you make this spectacular catch, and everybody's clapping you up and everybody thinks you're the hero. But the problem is it's not a high probability throw. So if you're looking to win the game, that is not the throw you need to bring. Once in a while, sure, it's okay, it'll be fine. But the problem with that play is that, one, there's only two players involved. So that person who's throwing the disc has to be really, really precise. However, it's hard to be precise on that such a long throw. Whereas the short throw, it's so easy to be precise. The person's right there, you just toss the disc to them and it's easy, whereas this big hug play, it's just impossible to be precise on it. And what it allows is one, there's more room for mistakes. Secondly, the defenders can just go run and catch the disc, so they have just as much of an opportunity to catch the disc as your own offense. So it's not the best play. It's a glory play, but it's not the best play if you really want to win your game. So if you're a competitive team and you're serious about winning, those are not the plays you bring to the table. Those are the plays you do when you have a big lead, or there just happens to be an opportunity and you take advantage of that. I remember this girl who was on my team. So just like I said, I was the one who would run deep and try to catch these. This girl was a short player. She would just do these quick passes, but she was always there. Anytime you needed to throw the disc to someone, she was always there, and all she did was these little short plays. So she would be there, she would make a perfect cut, she would catch it, a short little cut, she would catch the disc, throw, run. So she kept on doing this over and over again. So even though she never had that glory catch, she never had that star play, but her stats were spectacular. When you really looked at the number of catches, the number of touches of the disc, and number of throws, her precision was awesome, and the numbers she would put on the board were great, much better than these long plays. We try to do these big spectacular trades. We try to hit home runs, we try to stretch the trade, we get greedy, and we just want to keep on going with this. But that is not the reality, especially with day traders. For us, we need to be able to identify the opportunities, and if we have anything that is better than 1-to-1, so 1.5 to 1 is usually a good risk to reward ratio, or 2-to-1, we need to take those and we need to do them over and over and over again. We as day traders, we eat what we catch every day, so we don't have the luxury or the big accounts where we can just sit in the trade for months on end like hedge fund managers and just let the position run. So we need to be able to kill our food and eat it every single day. So we need to go for those short plays that give us more consistency, and more importantly, they give us the profits that we need in order to make a living at this. So the bottom line is, if you are wanting to become a consistent trader, look for those short plays, look for those high probability trades, get rid of everything else, get rid of the trades that are not high probability, that may or may not work out. Just look for high probability setups, and then be willing to take the profit, book the profit, and then look for next opportunity instead of just dragging it on and getting greedy in a single trade. Just close it out, move on to the next one, and that's how we make a living from trading. Hope you enjoyed this episode. For show notes of this episode, please visit tradingwithvenus.com/podcast page. That's it for today. I will see you next time.
Thanks for joining us today. With much gratitude, your show host, Raman Gill.